Hi, welcome to the Market Alert for Monday, 13th of June 2022. Glad to be back in the saddle after a week off. And as I said before I went, expect a good week and certainly some good moves, which I'll report on in an update in the live trade section of the member section of the website either today or tomorrow. Anyway, the news, the futures open down hard. S&P near bear market again, Treasury curve re-inversion imminent. It is highly probable that the bear market has ways to run. Yes, Friday, obviously, the market was down on all of this CPI news. Stocks tank as yield curve inverts after hotter than expected CPI print. US consumer prices reaccelerate in May highest since 1981. And a shocked Wall Street reacts to today's scary CPI print. I don't know what was scary about it. This is worse than anyone realizes, a dire outlook from Wall Street's biggest bear. And this is what they're talking about, is the CPI numbers from Friday. The previous was 0.3 month on month, forecast at 0.7 came out at 1%, taking the annual number, I think, to 8.9, somewhere in that region. We all know it's BS anyway, because inflation, certainly food inflation, is running around 25 to 30%. Okay, let's have a look at the Dow's reaction to all of this news during Thursday and Friday of last week. So in the daily chart of the Dow, we can see that of late we've seen the market move up to 78% retracement from here, drawn back, and you can see the market stopping in this area. But not only that, you can also see how the market pulled back here and then retraced as well to 78.89, with the momentum starting to drop off. The 50 bar moving average also creating a resistance in this market. Thursday prices move lower. Friday the CPI numbers came out, and then overnight we've seen the market gap lower. Whether it will fill the gap, I don't know. We'll find out by the end of today. But the 89 is a crucial level, 30,950 if you're using psychological areas. And then you've got the 30,638 as well. If this low is taken out, then we will see prices continue to the downside, and then we'll switch to the weekly chart or the monthly chart to get further indication of where prices could move to. In the 30-minute chart, there was a 450-point drop on the CPI numbers on Friday. The market continuing for a further, what looks like 400 points there as well. Let's just have a quick look and a quick calculation. So the Friday's CPI number, you can see there, 528 it's saying there. I don't know if it was actually quite that much. Let's just do it a different way. First half an hour. Yeah, 460. Yeah, I thought it was about 453. So yeah, the market down 460 points, 450 points just on the CPI news, and then the market continuing lower from there as well, down to the low at the close, which again was another sort of 500 points for the Dow there. And like I say, overnight the market has gapped quite severely actually. It's quite a big gap for the Dow. We got the close of Friday and the open there, 237 points, just shy of 250 points for the market opening overnight, and continuing to move lower as well. As you can see there, we're below the low, and the averages all lined up at the moment in the 30-minute chart, continuing lower. We've got prices just coming back, and this is going to be indicative of probably all of the stock markets. Just retracing there from this demand to here, we're just coming back to 89% retracement, but we're still overbought here, so we could see a bit of a move to the downside yet when the futures open at 7 a.m. Let's have a look at the German DAX. And in the German DAX, we have a similar situation where the market has gapped lower. As you can see there, we're down at 78%, 89 very important. You can see it's a bit stronger, which is bizarre really, given the fact that Europe haven't even started increasing interest rates when inflation is 8%. But so on that basis, it's going to play catch up very quickly, isn't it? Because they're still doing nothing about trying to stop inflation in Europe. Lagarde seems to have just completely ignored it. So again, watch the low to the left if there is further pressure on the US markets today. 13,271 will be the level. But certainly a big drop out of bed there for the last few days. Let's just have a quick look at what we've got, including the overnight. We're down 884 points over the last few days from Thursday. In the 30-minute chart, we can see also that we started off trying to be bullish on Friday, and then the market moved lower, bounced a bit, and then the news hit. I would say this is the news, yeah. This is the CPI numbers from the US. The market then moving sharply lower by 100, 200, 250 points, finding support with demand oversold. Bit of a bounce before the close, but then again you've got that gap of 100 points from the close of Friday to the open of the overnight. Also in the 30-minute chart, you can see sitting there as well at the 62% retracement at the moment. The low is up here, so we could see an attempt to move the market back to the low. All the averages as well in the right alignment for the short to continue if it does so at the open. In the 5-minute chart, we can see that on Friday the market was bullish initially in the futures, then we had a bit of a bounce at the open as well before the sell-off, and then classic waiting for the CPI numbers. You can see the market trading sideways there, which is perfectly normal. The news came out and immediately 100 points down from the BRNs there, and then the market just continuing to move lower during Friday's trading session there. Let's have a look at the S&P, and in the daily you can see that we're more or less back to the recent low that we had back in May the 20th, which is here. You can see that there. Let me just draw in the price here. It's 3810 for this low, and you can see the S&P is far closer to this than the Dow or the DAX. And this will be leading the US markets lower if it continues. But again, you can see the market gapping lower. In the 30-minute chart, again, absolutely nothing happening until the CPI numbers hit. And then we get a bit of a bounce here before the market then becomes overbought in the 30-minute and then goes lower. You've got your gap. And at the moment in the 30-minute chart, we'll just move this over. You will see that we're more or less 100% retracement now to the overnight low that's been made at 3834. Break below this, we'll see the daily chart heading to that 3810. Let me just double check that because it's obviously difficult to see there. Yeah, 3810. So again, keep an eye on this level as well. In the currencies, during last week, the market made an attempt to move higher in the GBP JPY. Friday, you see the sell-off there as the dollar strengthened and has continued to do so overnight as well, putting pressure on the metals, which we'll look at in just a moment. Could expect a bit of a bounce here. We're certainly overbought in the yen in the daily chart, and you can see the market's reaction, in particular the CPI reaction there on Friday. So we've got a bit of a bounce here at the moment, but that's going to be dependent on what the dollar does. We've got, if we just go back to the news while I'm thinking about it, let me just refresh this. This week, very important, we've got the Fed funds rate. It's the biggest news item of the week. We've got PPI today, that's tomorrow. So let's just have a look at and focus on this. We've got a 0.5% increase forecast for Wednesday evening. That's going to be bullish for the US dollar, so that's going to have an impact on the currencies. You can see that already starting to take effect with the pound on Friday as this was moved lower, as the dollar moved higher. trading to 78% retracement at the moment. Expect this to go further when the rate is increased. If it is increased by 50, there is rumour of a 0.75% increase in rates. We'll wait and see if that actually happens. So the pound under pressure, which you can see, was already starting to feel the pressure because the forecast was for the inflation rate to come out annually at 10%. It came out about 8.5, as I said earlier. But nonetheless, it's still put huge pressure on the market. It's down on the overnight as well, trading back to the low, which is no surprise. Markets tend to come back to the previous day's low, even if they do continue to the downside thereafter. And finally, let's have a look at the metals. And starting off with the silver market, managing to recover on Friday, but overnight this is down. That's because it's being hammered by the banks once more. And as I've said before, I still think this is heading to the $20 area. A lot of people don't think so, but we'll find out, won't we? When the increased rates on Wednesday night and the dollar spikes higher, well, it's, the metals are inversely related, as is Bitcoin, so it's going to get smashed, isn't it? That'll be their excuse. It's staggering to still see that this market is trading at $21.50 or in that area, when the all-time high in 2011 is $50 an ounce, more or less, and we're like 70% less, and you've got a massive inflation around the globe. The only commodity in the world that is 70% cheaper than its all-time high, with inflation of 8 to 10%, and that's official numbers, let alone. And also, of course, the metals are a hedge against inflation, so it goes to prove how these are being suppressed and not let loose. They will one day, but we'll just have to be patient and wait until they allow it to do so. And there you can see Friday's reaction. You see it's inflation, a great hedge against inflation, but then they sort of say, well, okay, we'll discount that now, and the market's back 50%. That's what these bankers, spelt with a B, have been doing for many, many years now. Unbelievable. Gold, nice move on Friday, but again, also coming under pressure overnight. In the 30-minute chart, you can see that they've taken advantage and brought the market back just over $100 so far. And crude oil moving to the upside still. We've had to roll over to the September contract. That's the only one that's available. I haven't got a dollar chart at the moment because they haven't updated it on the ETX platform, which is a pain in the rear. I don't know why. The June contract rolled over on Friday to September, but it's not available as yet. Well, it is available, but it's not up to date. But crude oil there, sideways to higher as well, and obviously this is going to play a large part in going forward with inflation as well. You can see there 120 is where the market struggled a bit, needs to break through there if it's to get anywhere near to its $138 per barrel level there. Okay, that's a quick roundup of where we are, and like I say, I'm glad to be back, and let's see what happens today as the markets continue to show some weakness. One thing that I did forget to look at when we're looking at the metals is the gold-silver ratio. It's at 85. You can see that's been moving up again, adding to the fact that there's been downside pressure added to the suppression of the silver price once more. Well, what a surprise. Okay, that's it for this one. As ever, thanks for watching, and I will see you in the next one.